Hello, this is Jim Smith at GAN Analysis LLC. Today I want to show you the effective Fed funds rate. Uh, Imagine for a moment if this were a stock, and it suffered a huge correction. Well, when it bottoms out here, you'd be looking for it to go back up, and sure enough, it is. Now, from a technical analysis perspective, a move back to a former high like 526, that's 5.26% in yield terms. This is the Fed funds over here, expressed in yield terms. So if it goes back to retest this high, that would be like a stock just going back to the first major high on the chart. You don't have to talk about it going up here. Even a move back to 5.26% is already pretty huge. Question is, what does that do to the stock market? Now, if you look at the GAN lines, the GAN fan, you have something at 7% in January of next year. And I'm thinking, could it go there? It's possible. But at the very least, I think it can go back to 5%. So now that people are looking at, what the Fed has to do to stop inflation, there are economists out there talking about 5%. So it's no longer as extreme as it once was. So if we look at this, what is the GAN fan showing us? Well, where you cross the level of the prior swing low is called a square out. And we use it for timing because it indicates when you're likely to experience a change in trend. So in this case, it caught a low. This one was sort of close to a low. This one was bang on, and this one, it caught a low, and of course it still traded at the low, but it didn't go any lower. It retested the low, and then it went up. This is kind of like a long basing period. If you think about, if you were looking at a stock that was trading down, it's just basing and it's getting ready to move up again. So the scary thing is that if this were like a stock, then yeah, maybe it's just getting started. And who knows how high it will go, but, it got to 20 back in 1981, so half of that would be 10. And for GAN, 50% retracement is always a big number, a big target. So could it go to 10? I don't know. That seems a bit extreme because, the stock market would be down 8, 9, 90%. Who knows? But even a move to 5%, on Fed funds would already trash the stock market in a big way. And economists are now talking about 5%. That's no longer extreme. So whether it goes to 5 or 7, you're already talking about a major hiccup in the stock market. The economy with the Fed funds at 5%, yeah, that's already a big deal. So if that's where the Fed is taking Fed funds, then guess what? You got a little more pain in front of you. The real question you want to ask yourself is, where is the stock market going to go if Fed funds goes to 5%? And that's where the GAN charts come into play. And I welcome you to try the service for a month or 3 months. Try it out. Just go to the website, www.gananalysis.net. Hit the shop button in the upper right corner. You can pay by credit card or PayPal. Just try it out for a month or 3 months. What do you got to lose? You try it. It's not expensive. You try it out for a little bit. See if it works for you. And like I say, we do analysis in detail on stocks, bonds, forex, commodities, and crypto. So once you become a client, you tell me what you're interested in, and we will do a report on it. Good luck in your trading. I hope this has been helpful.